All right, everybody. Good morning. Hope you are well. Only 20 minutes behind my preferred starting time of 11 a.m. here. Baltic time, Helsinki time, Kiev time. 10 a.m. Germany, France, 9 a.m. London. 4 a.m. New York. So, streamed every day last week. Very exciting. Did that another week as well, I think, since I've been starting this year streaming. Probably going to finish on the old stock to flow series here. I spoke about stock to flow every day last week. Probably going to finish that today, but I'm happy to do it more. If you guys want to see more, more data, more, just more analysis of the issue there. So, going to get a couple things ready here. And then we will start chatting about it. All right. Let me start sharing some screens. One second. All right. So here we are back in 2018. This is my first post on Bitcoin following a power curve. All right. Drew a few trends. Okay, this one was showing the yearly progressions of the power trend up until 2018. This strong one here was 2011's trend. Was a huge compound growth. 8,400% compound growth until 2018 from the beginning. Then these were more moderate, 90, 100, couple 100% even, if you look at 2013's trend, couple 100% compound growth. Okay. So it is funny, and, it is what it is. My marketing skills notwithstanding. Posting this in 2018, getting a few likes, 17 likes, and then our friend PlanB coming here with this. Oops, that's the wrong one. Modeling Bitcoin value with scarcity in 2019, 3 months after I posted, talking about using stock to flow to value Bitcoin. The key confusion, I think, at the end of the day, is that stock to flow itself is a power model. It's a power regression. Okay. How do we know that? We know that because he's, in the way that he's trying to derive his coefficients here, he's putting market value on log scale. He's putting stock to flow on log scale. What do you get when you put log linear on, what do you get when you put yx on log? You get a straight line. Okay, that's what you get with a power curve. Okay. So the fact that he drew a power curve, he did reference it somewhere, power laws and fractals here, that it was a power curve that he was in fact drawing. All right, power regression, you see right there, that straight line. I think the confusion about this whole model, the the excitement around it. Well, first of all, it was, as PlanB mentioned, it was from Saifedean's book. And I mentioned already some glaring omissions that he's used with this model throughout the years. He's talking about an idea which is simple for economists. He's talking about this idea of stock to flow, which is simply the inverse of the growth rate. But at the end of the day, I think it's a ham-fisted way to look at what is actually happening, which is the growth of the Bitcoin price, or the growth of Bitcoin adoption is in fact following a power curve, which most networks follow. And then on top of that, I should say, his continued use of the word exponential occurs when he talks about exponential growth. I'll come back to that point. But this is not an exponential curve, to be sure. It is a power curve, but he's using the word exponential a lot. And indeed, the emission of Bitcoins is exponential, so it confuses the issue. In my opinion, as I've been posting since 2018, the idea of just simply acknowledging that Bitcoin is a power curve, all right, the adoption of it, the price, the market cap, when you put charts on it and you can see and you can analyze the trend line, you see that it's a power curve. That enough is to actually understand what is going on. Okay, so I talked about this last week in the stream, some stock to flow fallacies. We'll get back to this. At the end of the day, the highest market signal is price. Okay, so here I have now a quadrant I've created. I'm thinking I might make this adaptive or updating on my website, because it doesn't change that much. Although gold and silver, we do get new data from World Gold Council and Silver Institute and some of these entities every quarter or so. Obviously, there's more like oil tankers or, aircraft carriers, very slow-moving things, gold and silver. Bitcoin is not. That's the first thing. But anyway, here's the quadrant. All right, we need to understand this. These are facts. There's no disputing this. There's no, I am simply reporting to you the math. All right, I've crunched the numbers, run them. I'm reporting to you the math. Okay, so let's look at the trend. At the end of the day, we got to look at the trend if you want to understand what is happening to an asset. Okay, the trend is your friend. Gold, silver, Bitcoin. What is the price movement of gold and silver? It's exponential. We talked about that. Okay, here's the gold price. Exponential, very simply, exponential on log scale, log linear scale will be a straight line. Okay, so this black trend mirrors what you see in this horizontal black trend. I should make these different colors easier. 5.1%. Okay, so the gold price, which is the highest, purest signal in the marketplace, since gold has been floating, moves at 5.1% per year. Compounded. That's the CAGR, the lifetime trend. It's an exponential thing. Okay? So there you go. The price for gold and silver is exponential. But as we've been talking about with Bitcoin, all right, let me just find it. Bitcoin is power. All right? You look at the trend line of Bitcoin on log linear. You have this nice, beautiful, simple power curve in time. Okay? And so to be clear, the x-axis is days since the Genesis block. The x-axis is not dates, has nothing to do with the dates that you see here. All right, that's not how you draw this curve. This curve is drawn from starting January 3rd, 2009 as 0 or 1, actually. 0 or 1, it doesn't really matter because you're starting it here, but 1 is actually the way to count from it. 1 is January 3rd, 2009, and then you count out the days. That's how you draw this power curve. All right, this nice, beautiful power curve, and we can see today, last feeding the data into the model, we had big spike yesterday after a big dip, and now February 4th when I pulled it into the model, $98,127 Bitcoin. Above trend. The trend at the moment is 91,914. All right. And indeed, when you pierce the trend moving from the lower side to the upside. That's a big thing. Okay, it doesn't happen too often. All right, you can hover around it, but when it goes up, it usually explodes up. Okay, so that's what people are hoping for this year. Yours truly included as well. I don't deny that we're moving into an environment with strong tailwinds for Bitcoin, and also according to the typical 4-year cycles, people know we're moving into this above trend price action. Okay, so let's go back to our quadrant here, our table. The purest signal in the market is price. Gold, silver, they follow exponential trends. Bitcoin, power. I'm not going to show silver today. I've showed it before. It's redundant. It's the exact same dynamics as gold, even if silver has 50% industrial use case. Now let's look at the emission. Okay. Gold, silver, it's exponential emission. Bitcoin, what is Bitcoin's emission? Exponential as well. Interesting. Let's look at that a little bit deeper. All right, so here's the all-time gold ounces as well. I've shown this. This is the supply, actually. It's not the emission, but you can very easily understand that the new coins is going to emit at the same rate. So let's just show you here. We have it's roughly 1 million ounces a year. Okay, so let's go back to 100 million ounces a year. Let's go back to December 2023, 5.8 billion ounces of gold mined. January 2025, 5.9 billion ounces of gold mined. It's 100 million ounces a year. Okay, and now that was, of course, smaller back in time, but it's the same. It should be intuitive. That's the same growth rate, the same trend. It turns out to be something like 1.8% per year, 1.7% per year. Okay, that's the all-time compound annual growth rate of gold. And depending on your numbers, depending on your inputs, you might get some different figures. 1.8% per year. Okay, this is gold available, not all-time, but available ounces. Okay, if you included all-time ounces, you'd get something that is closer to 7 billion ounces. Okay, point is, this is the key: 1.7, 1.8. If you look at the all-time, it's 1.7. Available, something like 1.8% per year. Okay, again, exponential growth. You can see the growth rate it's going to be a straight line. Now, Bitcoin's emission is a bit interesting. Okay, so this is what it is. This is Bitcoin monthly issuance. All right, so back in January 2010, we were running. This is a full year after Bitcoin. We were running at 237,300 Bitcoins per month coming into the system. And as we know, this would go down. All right, every 4 years. In fact, it halves. This monthly issuance halves. Okay. And so here we are right now in a period where we're getting 13,000 Bitcoins per month. We're coming into a full year of this. We're just transitioning. We're actually in this period right here. A little bit lumpy still, but we're coming out of the full halving, which happened in March, April of last year. Okay, we're just coming out of that to where we're now at. If you did this on a yearly basis, you would see that diagonal still come down. We're coming to 13,000 Bitcoins a month. That's the projected. All right. You can see it's still a little bit lumpy. It's not always like that, the actual data. And then once you start projecting, it's solid, 13,050 Bitcoins per month. And down we go, all right, every 4 years. Now let's draw a trend line on this emission and see what it looks like. It is straight line on log linear, okay? Sorry, there's actually a wrong title. This should be emission, stock to flow. I'm gonna bring in stock to flow in a second, but this is just emission. So these are Bitcoins. We got a decreasing amount of Bitcoins every month, all right? And what's the trend line? The lifetime trend of this actually, in fact, is a decrease of 16% per year compounded, okay? or we can put this in stock to flow terms, actually comes out to about 6. Now, the 6 is simply 1 over the compound growth rate. Okay, so this is where it's interesting. The doubling rate is actually, in my opinion, the best thing to look at. What's the doubling rate? 4. Doubling time is more accurate because it's the log of base 2 divided by the compound growth rate. We understand 4, don't we? So it's actually not the stock to flow that makes sense. I'm just taking, stock to flow is a very simple thing. It's 1 divided by the compound rate. The actual answer is 4, doubling time, which means that the trend is 16% per year compounded. All right, so doubling time is different than stock to flow. I mentioned this a few times. That's why I always talk about doubling time. I always talk about compound growth when we're talking about exponential growth, which again, the stock market, gold, silver, the monetary base, money, the money supply, it all grows at an exponential compounding rate. So doubling time actually tells us stock to flow prima facie. All right, so that's interesting. Now, again, we just invert this now, the emission, to get stock to flow. So stock to flow, now that's going to be correct axis here. This is just simply inverting the emission. Okay, now here's our stock to flow. Draw a trend line. It's a great trend, 100%. Clearly, the stock to flow emission, the emission of new coins, if you want to call it exponential decay, it's clearly exponential. It's a straight line on log scale. There's only one explanation in math for what is a straight line on log scale, log linear. It's exponential, 100% R squared, all right? And what is the lifetime trend of that? 19.5%. It's just the difference in the numbers. But again, doubling rate is going to get you the correct answer. Doubling rate. Log of base 2 on that is going to say it's an increase. Stock to flow will increase every 4 years. All right. And if you take 1 divided by the compound growth rate, you're slightly off. So I'm getting a stock to flow, lifetime stock to flow rate of 5, when in reality it's 4, because you got to do the math. You got to crunch the numbers. Remember, a 10% return compounded will not double every 10 years. A 10% return compounded doubles every 7.2 years. That's why, again, stock to flow to me, it's sort of like it's an ape, it's a ham-fisted sort of a metric. It's what economists like to use when they just want to try to convey a simple point. But the problem is the number actually isn't completely accurate. It's one thing. The more accurate thing that shows you what is happening here, the lifetime doubling rate, you derive it from the compound growth rate. It's 4. So again, one of many reasons it's better to use, when you talk about compounding, it's more accurate to use the compound growth rate, 19.5% increase in the stock to flow every year, compounded annually. That's a doubling time of 4. Everybody knows that the stock to flow doubles, the stock to flow doubles every 4 years. But the way to calculate stock to flow is a very simple, ham-fisted 1 divided by the growth rate. That will get you 5. Doesn't make any sense. So again, another reason why you just stick with exponential. So here's the point. We did price. Bitcoin, we observe it. It's a power curve. We did emission. Gold, silver, they're exponential. Bitcoin is exponential. Emission. New units. Bitcoin is interesting here. Okay, so the price we observe as power. Why can't I find it? Too many things. Bitcoin's price is power. All right, it's that nice, beautiful curved line. And why can I tell that it's for sure power and not exponential? Because the rate of growth decreases. It's a slight decay, but it's not exponential decay. Exponential decay would be a straight line. The percentage would be a straight line. Here's exponential decay, emission. Bitcoin's emission is exponential decay. All right. Gold's emission is actually exponential growth. Silver as well. The units upon units slightly increases every year. Okay, Bitcoin's is exponential decay. All right, but price for Bitcoin is power. 96% R squared, far better than exponential, which I'm going to show you again on the price curve. It is power. It has a power law relationship. Okay, so we're on the first two elements here of our price, emission, supply, market cap quadrant table here. So Bitcoin, interestingly, it has a power law or a power curve relationship. I try to stay away from the word power law. That triggers people. I always call it a power curve or a power trend. Bitcoin has a power curve on price, an exponential curve on emission. So what does Bitcoin's supply itself look like? Well, again, gold, silver, very simple, always exponential. Just like most financial markets, take us back to our gold available ounce market cap. Not market cap, available ounces, just in native units, all right? 100 million ounces a year. Increasing, by the way, all right? Each year increases those amounts of units by about 1.7, 1.8% per year. Exponential growth, straight line growth rate. Horizontal line, this black line is horizontal. Overall, over the lifetime, 1.8%. Yes, it can change year to year. This is the green line. This is the green line. Sometimes it's 1.8. Sometimes it's 1.7. Sometimes it's even 1.6 when COVID hits. Straight line growth. You take that green line, you stretch it out, you essentially average it. It's not an average. It's more powerful than an average. Compound growth, 1.8% per year for available ounces, 1.7% per year for all-time ounces. All right. What is Bitcoin? What is Bitcoin? As I mentioned last week, if you look at Bitcoin's cumulative supply here and you stretch it out, we take the best fitting curve at a 93% R squared. It's actually logarithmic. Logarithmic. That is the trend line that fits Bitcoin's supply in time the best. And again, what is the x-axis? It's not dates here. I'm not factoring in the values of these dates. It's numbers. It's number of days since the Genesis block. Okay. The compound growth here, if you just run it from the beginning till today, is about 23%. This is the logarithmic curve, not the actual curve. It's higher, actual. But I'm just purely mathematical. It's running at a 23% growth rate of this curve. That's not an important number because we know Bitcoin's emission. I'm not arguing this is an important number. I'm just showing you scientifically, mathematically, it's more of a logarithmic curve. Now this curve, as well, we can see is not useful, all right, because you can run this over. It gets to, when you get to 2140, 32 million Bitcoins, right? That's wrong, as we know, because Bitcoin is unique. Bitcoin is unique in the universe in that it's scarce and it's capped. We know this. By the way, if I made a chart that just showed the full supply from the beginning until now, this number would be closer to 21 million, this trend, and it would be a little bit lower R squared. It doesn't matter. I'm just showing you for illustration purposes, it's logarithmic. So it's very interesting, right? We have emission in Bitcoin is exponential decay. You can clearly see that because it's 100% R squared. No one can argue with this. Everybody knows that's what you just put numbers to it. And a Bitcoin on Bitcoin's emission, it's negative 16% per year growth, or a halving every 4 years. Okay. And if you put that in stock to flow terms, the percentage is slightly different, note. Okay. But again, the percentage is going to give you the accurate number. It's 19.5% per year compounded. That's the slope of the trend, doubling every 4 years stock to flow. Back to the chart. This is kind of interesting then. We have now, if we look at price, emission, and supply, gold and silver, very simply splashed across the board is still exponential. Straight line on log scale, exponential growth. Bitcoin has 3 different curves that will map what it's doing. Power on price, exponential on emission, logarithmic on the actual supply curve. Now let's look at market cap. Keep in mind my first point here. The highest market signal in the world ever for any asset is always price. Doesn't matter what you're talking about, diamonds, chairs, food, watermelons. It is price. That's the highest market signal. Nobody can understand in the grocery store what the supply of milk is, or the amount of cows in any different part of the country. They don't care. They don't think about it. They just think about price. And if the price comes too high, they might substitute for other goods. Okay. That just gets into boring economics 101, right? So the main takeaway is price is the most important trend line when you want to understand the trend. When you want to see if the trend is your friend, price is number one. All right, should have numbered these, okay? I'm putting emission number 2 and supply as number 3 because you need these two to get to market cap, but still, price is number 1. These are all derivatives now, okay? They're secondary factors. They influence demand, but they are secondary factors. Number 4, market cap. Gold, silver. What do we got here? Same exact exponential trend. Let's go to the chart. Again, I've showed this 1,000 times. This is available gold, not all-time gold. We got a $16 billion market cap as of right now. Sorry, $16.5 trillion market cap. You're above 18 if you do all-time, above 18 trillion if you do all gold ounces mined throughout humanity. But you got to take away about 15% industrial for store of value gold. This is my number. 87% R squared. The market cap of available gold ounces grows at 7% per year. And by the way, when you have exponential upon exponential, you multiply the two, price times ounces, all right? What do we got? 1.8% for ounces, 5.1% for price. What's the sum of those two? 6.97, rounding here. You multiply two exponentials by another. You multiply two exponentials by themselves, you'll get another exponential. You can sum the compound growth, 7. So gold grows. This is very important for the point that I'm trying to make here. As a major input factor of the stock to flow model, one should understand that available gold grows just like all-time gold, just like jewelry, just like bullion, any of them. They all grow in exponential fashion, straight line on log scale. Okay? Very important. But what happens with Bitcoin? All right, we've looked at Bitcoin price. Why did I put that there? There we go. We looked at price. We've looked at supply. We looked at emission. What happens when you take a power curve price times a logarithmic curve supply? What happens to the market cap of Bitcoin? Remains power. Remains power. Okay. You can see that now we're actually under trend. Remember, for price, we were above trend. All right. Let's go back to price. Where is it? We were slightly above trend on price. Price is the best signal. But interestingly, with market cap, we're below trend. Both about a 96% R squared. The trend, an amazing trend line, $2 trillion. Actual market cap, $2 trillion. Pretty incredible at the moment. Of course, we've been well under it for, weeks and months. And in 2021, we were well over it for weeks and less months. Usually when it goes above the trend, it's a more rare occurrence. All right. But this is a power relationship. It's not a straight line on log scale. It's not a straight line. If I did this on log, of course, it would be a straight line, but unfortunately, I can't do that because my chart breaks in my software. You see it's a straight line, but it's not correct. I'm going to have to refresh that because okay. All right. So let's go back to our quadrant here now. Market cap. Gold exponential, silver exponential, Bitcoin, power again. Okay, so here is where I think the confusion comes from people trying to understand if stock to flow is a helpful model or if it will work, or why did certain characters say that Bitcoin was going to 300,000 last cycle. The reality is that Bitcoin grows in a less straightforward way than gold and silver, okay? There are reasons for that, but it's less straightforward. Gold and silver, down the chart, simple. down the table simple. Exponential all the way down. Price, emission, supply, market cap. It's all exponential. It's all you see. Bitcoin different. We got two power curves, one on the price, one on the market cap. We got an exponential curve for emission, where it's a 16% per year decline if you smooth it out. That black line smooths it out. Oops, sorry. This black line, the trend, smooths it out. And you give that a percentage, it's a constant 16%. Constant, that's exponential growth, constant, straight lines all over the chart. Bitcoin has exponential emission, logarithmic supply, but then, power on the price and the market cap. So you have three different statistical mathematical curves that fit best for Bitcoin, whereas you only have one for gold and silver. So that prima facie will probably cause some confusion to people. What is it saying, though, when I'm telling you the highest market signal you can possibly find is price? That's the first point. And the second thing is, if price is power for Bitcoin, and if market cap is power, even if emission is exponential decay, even if that supply, that asymptotic, slowly retreat to 21 million coins supply curve, all right, which we all know and understand, is actually logarithmic. That's the best fitting curve of that. What does it tell you if the market cap and price of Bitcoin is power? The answer is power dominates for Bitcoin. Okay? Power dominates. Power is the trend. The trend is simply not, it doesn't, even though emission is exponential decay of 16% per year, or halving every 4 years, or stock to flow doubling every 4 years, whatever floats your boat. Exponential decay is not strong enough to be reflected in Bitcoin's price. It's not exponential growth in price. It's power growth. You don't see logarithmic at all showing up either. All right. So again, three different mathematical scientific curves for Bitcoin, but the one that dominates is clearly going to be the highest signal, price, and then market cap, though a derivative, pretty high signal as well, power. The emission, the supply, it's secondary. All right. Gold and silver, very simple. Exponential growth, exponential growth. Okay. So the conclusion is here. I'm going to build it out more. The stock to flow model is actually a power curve with a blend of inputs that are both power and exponential. All right. So let's look at that. I talked about this before. This was the original one. This is Bitcoin's stock to flow as it goes up in value. All right. Stock increases, value increases. It's on this nice straight line because Bitcoin has power relationships with value. But then he slaps on silver, slaps on gold. And again, this has changed. He's deleted all of his charts with stock to flow of 3, but I showed you from that Monday morning newsletter, he was, with Saifedean's input, pumping silver, having a stock to flow of 3 for a long time. Now he puts 22, which is more akin to available silver, but still not great. And 62 for gold, which again, you can find different stock to flows here. That's the first problem. But what's the glaring issue here? What did I just say? What did I just say about the stock? So basically, all these points go into his original model. This gold, this silver, and this Bitcoin stock to flow figures, all these different figures. Same thing here with this cross asset model where he basically increased it a little bit more. All right, this was over a longer period of time. It was a year later. And he took these sort of 4 clusters, I guess to make it simpler. He said it was statistical, but, picked at the early days, he picked the stock to flow here, 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 and here. These are all Bitcoin stock to flows. Still put gold in, still put silver in, although I think the numbers changed a little bit that he doesn't, does he say it? Yeah, I think he says it somewhere. Yeah, so now it's 58. Remember, it was 62 on the first model. 33 for silver, and he's running curves. Let me reread what I just wrote here. The stock to flow model is a power curve, it's a straight line on log, with a blend of inputs that are both power, these Bitcoin S2F clusters or pieces of Bitcoin data, and exponential, gold and silver growth. Gold and silver S2Fs are included in his model. But why include those? Why could that be problematic? Because Bitcoin's price grows in power. Bitcoin's market cap grows in power. It does not grow in exponential like gold and silver. Why would gold and silver have any influence on the value of Bitcoin? Let me explain more. I talked about this before, right? The first mistake is I can give you an infinite number of stock to flows. Okay, we did this. I showed you the other chart with the different bubbles and pictures. This is just taking them all and putting them as the same plot. I got gold stock to flows for available stock, bullion, jewelry, silver. I can give you all sorts of stock to flows. Okay, I got them in dollar terms and in native unit terms. Let's take only native unit terms. It gives you a little bit of a simpler picture. Okay, this is native unit growth of gold, silver, and Bitcoin on an annual basis. But remember, gold stock to flow, silver stock to flow is constant. Okay, it doubles every 39 years. Available gold doubles every 39 years, or a stock to flow value of 56. Again, this is why stock to flow is a ham-fisted sort of ape way to look at it. It's not even a number that makes sense. Stock to flow is supposed to be the inverse of the inflation rate. The purest inflation rate, that is money growth rate, is going to be the compound annual growth rate, which I have calculated here at 1.8% per year, the black percentage right here. The better metric is always doubling time. If we're talking exponential, it's just doubling time. Then we can actually see what's the stock of this going to double, right? And we can predict it out on a trend. It's 39 years, right, for available gold. But again, we can do all-time gold, jewelry, bullion. We can look at the growth rate since 2009, since 1971. Before that, we'd get all different stock to flow numbers. So there's your very subjective inputs of the stock to flow model right there. But again, the better unit to look at is doubling time. It's not stock to flow. Stock to flow is going to give you an even wackier number, 56, for gold available ounces, when really the doubling rate is better. But anyway, let's use the stock to flow. That's what I did here. Let's assume stock to flow for silver and gold. But go back to this table. How is the emission grow? All right. How does the emission and the supply grow for gold and silver? It's always exponential. Always exponential. So remember what this model is showing. Okay. It's the same model here. I got market cap, stock to flow. Market cap on the y-axis, log scale, stock to flow on the x-axis, log scale. Let's go back to his model just to show what's happening. If you have silver right here and gold right here, and you claim that that's a key component of your model to make this trend line, what happens where silver here is valued at his time period? Where is it? Does he say it? Sorry, let's look at this one. Silver is valued at 561 billion here, and a 33 stock to flow. Yes, he's 10 units off from what he did in 2018. It's valued here at 561 billion. Gold at 10 trillion. What happens when we move on? We move time throughout the years. Remember, this is a 2019 numbers. We got, $5-6 trillion gold market cap. All right, 7. In fact, I would say it's about 7 trillion in 2019. But we move on through time, and now the market cap for gold is $16.5 trillion. Or if you want to use all-time ounces, it's over $18 trillion. What is the net effect of the inputs on our stock to flow model on this straight line? They're just going to go up. Your gold and silver dots on this curve are going to move up because gold and silver grow exponentially. The stock to flows stay the same, roughly. And again, I would argue which one is actually the correct stock to flow to use. I would argue that ad infinitum with anybody who wants to argue about this input for the stock to flow model. Gold and silver stock to flows relatively are going to stay the same, but their values move up over time. So that's going to skew the model. It will change the model over time, and it won't be comparable. Why? Because what happens with only Bitcoin values? They move in market cap function in power. In power. Bitcoin in the stock to flow model moves on the diagonal. So what you have here is a blending with stock to flow. It's a blending of exponential stock to flow metrics, gold and silver, with, and again, I would argue which one you even use, with Bitcoin stock to flow metrics, which are power. The stock to flow model is a power curve with a blend of inputs that are both power, the Bitcoin STF clusters, and exponential, gold and silver growth. The stock to flow model is not an exponential curve. It is not an exponential curve. Why do I think that it's important to point this out? Well, we're moving into another, perhaps bull over the next year. It seems like it will be. Tailwinds are behind us, it seems. The curve itself, where's my price? Too many things here. Curve itself, we're above a little bit at the time. But, if you go out till the end of this year, we presume, we could be at $120,000, $130,000 Bitcoin. And of course, if past is prologue, we're going to outshoot that. All right. Let's take off but the price usually booms above it, right? Every 4 years. No one knows if it will happen again. No one knows. I don't know. PlanB doesn't know. No one knows. But if past is prologue, we outshoot the power curve. It's important to still say that even though we can talk about compound growth, right, here, as far as this power curve goes, this declining compound growth curve, the fact that it is a smooth line declining down, shows us that it's not exponential growth. Bitcoin does not grow in exponential. So my question for PlanB would be, he's put these power relationships in his model. His model is formulated with power. But he says things like this. This was from about a year ago, all right? This is from CoinMarketCap. The 2024 halving cycle will be very interesting. Alternatively, 2022 was an outlier, and 2023 will later revert to the S2F model line. Alternatively, a nonlinear relationship between S2F halving and price results in a diminishing return. A diminishing return, okay? I agree with actually that point. It does have diminishing returns on a nonlinear relationship. That's what power is. But then look, 2022 was, in my opinion, an outlier. And exponential growth will continue until 50% adoption. Only time will tell. I've heard him say this in a few other places. I don't follow PlanB much. Again, I'm not attacking, and I don't really care. I'm just trying to show scientifically, mathematically, what's actually happening. He's using words like exponential growth. But exponential growth looks like this. Straight line on log scale. Straight line. It's not exponential growth. Bitcoin it's just not exponential growth. It's power growth. PlanB's own model is a power trend. And even when we do a pure power trend, as I've been doing since 2018 and others, Giovanni, others as well, you can see that it's a nice, slowly declining, you could say like this declining exponential. But that exponential decline is so small, okay, that it's still, first of all, huge. If you want to say that exponential growth is like above market, then we have it. If he's trying to say that it's like parabolic growth, what's your parabola, I guess, is the question. Because overall, it's a very, in my opinion, confusing to his own model statement. He's saying that 2022 was an outlier. He's saying that this 2022 period, here's the same model, all right, was unusually low. Unusually low. All right. But it's not an outlier on the power curve model at all. It's right on target. You know, the crypto winter was low before the 2013 boom was low. It's not an outlier at all. But he seems to be saying that Bitcoin will be on an exponential trend. So let's draw an exponential trend on Bitcoin's price right now. I've drawn this before. Here's an exponential trend on Bitcoin's price. We have the data. It's the same thing. Number one is the power trend. Number two is an exponential trend. Thank you, F Society, for the shout out. Thank you for joining. The dotted green line is exponential. You can draw any curve you want through anything. Like I said, you can try to shoehorn in exponential to power curves. You can try to shoehorn in logarithmic to exponential curves. You just got to look at what's the best fit to understand what is actually happening naturally with whatever system you're looking at. Bitcoin has been off of even getting close to an exponential trend since 2022. So perhaps PlanB is mentioning that he thinks that falling off of this exponential trend, again, I haven't seen any charts where he's just plotting exponential. Maybe he has. Let's take off the power trend. He could say that 2022 was an outlier. He said this a year ago, by the way, so somewhere here. So perhaps he was thinking that we were going to get back on this exponential trend and go crazy. Well, what is the actual exponential trend today modeled? $380,000. That's pretty far away from the power trend of 96% R squared, which is nearly right on target, right? As of the model, as of when I pulled it in, the power trend is 91,000. The price right now, 98,000, a bit above trend. An exponential trend, simple exponential trend, is $380,000 per Bitcoin. We're way off it. And again, I'm not complaining. I'm not saying I wouldn't want Bitcoin to go exponential. But you got to tell me, do you think that by 2040, the power curve says Bitcoin's going to be at about 4 million. An exponential curve says Bitcoin's going to be at 62.9 billion. Only 15 years from now. Which one do you think is more likely? Probabilities. It's all about probabilities. 4.1 million per coin in 2040 or 62.9 billion. This is just talking exponential versus power curve. Which one do you think is more likely? I would love to see it exponential. One needs to ask how accurate or how realistic, probabilistic such an assumption is. Okay, so let's go further. Let's beat that dead horse, all right? He's used this a lot. Exponential growth will continue. Exponential growth, exponential growth. Let's measure now. The stock to flow is it's a market cap phenomenon. Okay, we're talking about market cap here. So, oops, sorry. I'm gonna put this on log scale. Here we go. Here's our power trend now on market cap. Okay, remember, stock to flow, how you derive the coefficients, simply value is on the y-axis, stock to flow is on the x. And stock to flow is a variation of time, but it's sort of a jumbling. Every 4 years, that stock to flow increases, right? The emission halves, okay? Which is, by the way, an exponential function. Let's go back here. Emission, it's the only exponential function of Bitcoin, is the emission. The actual new coins that are coming into the protocol, into the system every 4 years. That is the only exponential function, okay? So let's try to understand this in a market cap phenomenon. Here's the power growth. Again, interestingly, we're slightly under trend. Remember, price, we were slightly over trend, but with power growth on the market cap, we're slightly under. Fine. Let's look at exponential, all right? Way worse R squared. Relatively speaking, this is way worse. 96% for power, 85% for exponential. Where would we be now in market cap if we followed exponential? 9 trillion, 10 trillion would be very close to gold territory here. Half of the monetary base, or a third of the monetary base, roughly. 9.8 trillion. Let's go out to 2030. Let's go out to 2030. 15 billion is presumed on the power curve. 15 trillion, that is 15,000 billion, is the power curve model. Exponential curve would be 1.7 quadrillion. Can I beat this dead horse for you anymore? If Bitcoin followed exponential, if Bitcoin was doing what the hopium of PlanB was saying, exponential growth will continue until 50% adoption. If it was doing that, the market cap by the end of this decade would be $1.5 quadrillion. Look, I know people like big numbers and hopium, but you got to ask yourself probabilistically, what are we talking about here? All right. Now, I'm going to do a stock to flow model. I got a few. Just on market cap, I got one. And on market cap, I just did this one. All right. Only Bitcoin. I'm not using gold in my model because that's wrong. But we can run a stock to flow model on Bitcoin, but let's, look, 97, 98% R squared. Great. The x-axis is not just going to go every year. Here I have every year stock to flows. I'm going to go every day. I'm going to run it every day. Very strong curve. Stock to flow running on, that is market cap on the y-axis, stock to flow on the x-axis, but running the data every day. So we get a very strong fit. Here it is. Looks okay as we've built out Bitcoin. And as PlanB came out with his model here, in first one in 2019, second one in 2020, right? Something like that. There was nothing necessarily out of whack, right? Exponential and, power and even exponential was looking perhaps better. It depends. This was closer to power here. This was better, I'd say. All right. Then the halving comes. 2020 halving starts to change. So again, what's happening with power and exponential here? With power and exponential, the x-axis is days from the Genesis block. All right. That's how you run the model. With the stock to flow, the x-axis is that actual stock to flow figure. It's the inverse of the exponential decay of the emission. It's this. So right now we are running into, we're running out of the, zoom in, where are we here? We just finished the, era of 60 stock to flows. This is why people were saying it was the gold stock to flow, right? We finished that era of 60. We're running into this era now. We'll fully enter that in June 2025 of 120 stock to flow, okay? And this is indeed the only part of Bitcoin that grows exponentially. The only, sort of, I'm calling these the four major trends. Two are power, one is logarithmic, one is exponential. Okay. So that stock to flow figure here, this actual figure, the 60, 120, 250, that is in his model. And that's why you get these sort of jaggedy stair step items. This is how it looks like, okay? But this is a power curve. It's a power curve, and it looks good, 96% R squared. Looks good. I don't know if PlanB has run this or if he talks about this versus his original model, but this is in my opinion, the most scientific way to calculate the power curve, right? First of all, you can't do gold and silver because gold and silver move up on log. The value moves up. Stock to flow stays the same on log. Bitcoin moves up and to the right in a linear fashion on log log. It looks linear. It's a straight line. Okay. So I am getting you a power curve. I'm only using Bitcoin inputs. I'm only using the actual stock to flow as it evolves, all right? An annual number. And it looks okay. It actually looks okay here. But notice how it will actually diverge within two halvings. So within two halvings, we start to see some bigger differences. And this is where I think the plot gets lost even on stock to flow. Okay. It gets you closer to exponential. Why? Why would this power curve of the Bitcoin market cap running a stock to flow metric instead of just simple time, why would it get us closer to exponential? Because the emission of Bitcoin is exponential. And that's what the stock to flow includes. Okay. My curve and the curve of, Giovanni and these guys, we've always been showing just a very simple one independent variable, one dependent variable, price and time, or market cap and time relationship. And it shows to be a very beautiful relationship, very close as far as values go. And it makes sense because networks grow in power. City populations, hub and spoke, nodes, these type of things, they grow in a power relationship. Nodes, you have few nodes with a lot of large users on them with networks, and you have many smaller nodes with few users on them. That's a power relationship, for example. So it makes sense that Bitcoin grows in power. Price equals adoption. Price equals the meeting point of supply and demand, crucially, and demand. So it makes sense. Stock to flow, with stock to flow model, with using Bitcoin only, not letting gold or silver influence our model, we let the exponential dominate a bit more. We let exponential supply dominate a little bit more. Exponential supply. That's why you get this stair step that sort of takes off a little bit more than power and gets closer to the exponential trend. And the difference is pretty big. It's 5x here by the end of the decade. 5x difference. Clearly, we're not going to be at 700. I mean, I shouldn't say clearly. I'm not going to be disappointed if we are. But an $800 billion market cap. Sorry, I keep saying that wrong. $800 trillion market cap for Bitcoin on exponential trend by the end of the decade seems a bit much to me. 800 trillion seems a bit much. The power trend is 12 trillion, right? Very close to a gold silver relationship. The stock to flow, which lets the supply, the exponential supply curve, the exponential emission curve dominate, gets us closer to exponential, but it's still a power curve based on the market cap, so it's not too crazy. 55 trillion. So, this is where I think there's just some confusion. People aren't really sure. It's a model. I mean, you can use it. Like PlanB has said, some are useful. All models are wrong. I forget who said that, but there's a lot of good quotes about that for sure. I mean, you can use it. You can think about it. But it's a bit of a ham-fisted metric. It's not pristine. Looking at the highest market signal, which is simply price. Simply price. Gold and silver are exponential animals. Bitcoin is a very unique animal. And with Bitcoin, it is true. We have exponential emission. We have emission. Logarithmic supply, exponential emission, exponential decay, inverse of that, exponential stock to flow. It's true. But what dominates for Bitcoin is power. Power on price, power on market cap. In time, it dominates. When I say in time, I mean over the days that we just count out since the Genesis block. And you can say in time, like in, sort of in the long run, power dominates for Bitcoin. All right, so that's market cap. Finally, again, I told you I'd finally get to a price projection. This is the coup de grace of five days of streams here, I'm going to show you the different curves on price. Okay. So with this, for example, we can back into these curves simply looking at the projection of Bitcoin's supply. All right. We don't need to use the logarithmic because it's just unnecessary, right? I mean, we need to use the curves for this because no one knows for sure how much gold is coming out of the ground next year. We can be pretty damn sure it's going to be 100 million ounces more, a little bit more than 100 million, right? Growing at 1.8%. Both the emission and the supply grows at just that constant 1.8% per year. We can be pretty damn sure it's going to grow that way. We don't need this logarithmic curve for Bitcoin because we know per the protocol what the emission's going to do, what the stock to flow is going to do, okay? So to get to a price comparable metric, we need to divide these figures by that assumed supply. And that is indeed what PlanB does to get us to a price projection. So now I'm going to show you the price projection curves here. Now, a quick disclaimer again, I'm not dividing by the supply with the price and with the power and exponential trends. It's again, very simply, I'm just running the numbers. You don't, just like I ran it for market cap, I don't need, this is why it's beautiful to take one independent variable, one dependent variable. Our independent variable is time. Our dependent variable is price. That's what you're looking at with these two curves again. It's the same exponential power curves, all right? But it's just very simple. Dependent variable is the y-axis. Independent variable is time. It's the x-axis. So there's no extra steps. I don't need to divide by the future supply coins that we imagine from the market cap. That is what stock to flow does because it's a market cap thing. It's valued on an XY basis of value and stock to flow. Okay, I'm putting that disclaimer out because the next ones I'm going to show you will divide by supply. All right. Thank you, BTC, for plebes. Completely agree. I think that day is coming very soon. It will be interesting if we have a boom and a bust, if we will retest the $60,000, previous high, which typically has happened, right? So, whoops. Even though, like here, when we hit 1200, it's not going to show up on this chart, but this is a daily, right? We hit something like 1200 at the end of 2013. We tested that, although we were a bit above it in 2018, right? After we hit 20,000. Then the previous top, as you know, we hit 60,000, a new high in 2021. Then we test that again. We actually pierced below it for a little bit when geopolitical guru Peter Zion said that Bitcoin was $17,000 overvalued at $16,000. So we pierced that previous high here. All right. So it takes a long time to get to this, but that was that's a 5-6. That's a 5. No, sorry, it's a 4. It's a 4-year cycle to do that still, right? So the question is, of course, if we do hit 300,000 as a new high in 2025, will eventually in 2026 or 2027 will we retest something like 60,000? That's a question. That's a question. Open question. Excuse me one second. Nothing like blowing your nose on a live stream and not muting it. You're welcome. Okay, so taking this stock to flow model, all right, trying to give ourselves an actual price chart, all right, and compare it all. I'm going to finally do it now. All right, I'm going to finally do it now. We have the power curve. We have the exponential curve. Very simple 2-variable analyses. Really one variable, one independent, one dependent variable analyses. How did I want to unveil this? Here's what I just showed you. Here's what I just showed you on the market cap. Okay, here's the market cap. This blue, I'll show you that now in red. Okay, so this is the market cap that we assume from the stock to flow model, which is it's a power curve, but it is influenced by exponential emission. Okay, it's influenced, in most people's opinion, excessively by the exponential emission function, divided by what we know the coin supply will be, all right, in the future, gets you to a price expectation. Okay, so let's see where we are right now. Right now, number one, the best fitting trend in my analysis. Let's get to the fourth. Number one is 91,000 price. All right, again, is above trend, 98,000 when I pulled into the model. Exponential, way out of reality, 380,000. I will remind some people what were some price predictions from PlanB in the last cycle, but we got 380,000 right now for purely exponential trend. And then the power curve of stock to flow, all-time Bitcoin, the purest way I can give you a stock to flow model, 206,000. 206,000. So it kind of hit here, but now we're taking off. It's got to catch up. So the question is, if Bitcoin can catch up by November, we get to $363,000 Bitcoin. Now, to be fair, even though we've sort of way overshot that idea, we did catch it in all the prior cycles. We did catch it. Okay, we did. No question. It's a power curve influenced by exponential emission. So we could catch it again. But we see now, two halvings from now, this curve will get away from the pure power signal. All right, it gets closer to exponential. It's more influenced by exponential. Okay, so let's go out to the end of the decade. Something like this, right? October 2030, the power trend says 530,000. It's actually closer to 560 if you get to December. 560,000. Exponential, 42 million. Wouldn't we love that? $42 million Bitcoin. John, I will answer your question in just 1 second. So we got I just lost the mouse. 42 million per an pure exponential regression. And then the power regression of stock to flow, okay, which is a more simple, pure, forget gold and silver variation of PlanB's model, 2.7 million by the end of the decade. So there are your, take that what you will. I'm not saying Bitcoin's definitely going to be one or the other. Not at all. I'm just showing you various exponential curves, various power curves, and various power curves influenced by exponential emission. That is the stock to flow, the red line, number 6. Okay. Now, John, you asked the question, why would BTC retest a previous high if the rewards have halved? That's just that's a general thing that it has done. This has nothing to do with stock to flow or trends. It's just, did I say high? I meant to say low. No, high. The high sets a new bottom. Okay, that's just what it happened. So the previous high here in 2013 was like 1,000. It was actually like 1,100 on certain markets. This is a daily. It went down to 200, but then we got up to 20,000, and then it tested that previous high of 1,200. It actually was quite a bit above it in 2018. It only got down to like 3,000. Remember? So it tested the previous high. And the same thing happened here. This 20,000 previous high became sort of an ultimate support for the next puke. And the next puke didn't come until 2022. So 2021, we got up to 60 grand twice, went down to 16 grand. So we tested and actually pierced through the previous high of 20,000. So I'm saying it's just a general thing that many people have observed, that it's the 4-year previous high back. We do test it in the new low of the next cycle. So that's what I'm saying. If presumably we're already above the previous high, all right? So we're moving into a new high. No one knows what that next high will be. We're certainly going to have some sort of a boom. If it's 200,000, 300,000, it will retract from that, and get probably to something like 60,000. I just say probably, perhaps. That's just a general thinking of the 4-year booms. Okay, that's what I meant there. Nonetheless, we're talking about general expectations here. The trend is your friend. That's what I'm trying to beat the dead horse on. So we got the power trend, exponential trend, and the power S2F. These are, in my opinion, the purest way that you can look at any model. Okay, one is pure exponential growth on price. One is pure power growth on price, the dark green. And then we have this S2F model, which is it's a power curve. All right, it's an actual power curve. It means it doesn't have a constant doubling rate like the dotted green line, exponential line does, but it's influenced by this exponential emission very strongly. Okay, because the x-axis, as this stock to flow climb, let's take out everything so you see exactly what I'm talking about. As these stock to flow numbers climb, right, we're in this, moving into this 120 S2F epoch right now, okay? As these climb to 250 and 500 and double and double and double every 4 years, that goes into this model. That's why you see these steps, this staircase. So what stock to flow is, at its core, only looking at Bitcoin, it is a power curve with exponential emission influence. It is a power curve. It's actually this. It's a power market cap. That's the first thing it does. Keep in mind my number one here. The highest market signal is price. Price, not market cap. Stock, market cap, other USD figures. They're derivations of price. Highest signal is price. So what you have with, I should have put this in the sentence, I'll add it. The stock to flow curve is a power market cap curve influenced by exponential. That's what it is. That's why you get this stair-step, interesting looking curve. It is not the pure curve of just price on power. Okay. So actually what you do to get this PlanB's, this is not PlanB's, by the way, this is mine. I don't know if PlanB has even done this, but I'm just taking the all-time stock to flow and running the data every day to get as strong as a number as I can. All right. What I am doing here to get this dotted red line is I am taking the market cap, all right, market cap over time, the stock to flow over time, which is exponential. So we got a power-like set of data in our analysis. We have an exponential-like set of data in our analysis, and we are forming a power curve. So you still get a power curve, but it's more influenced by both market cap and exponential emission. And then one more step, by the way. This will give you a market cap number. All right, I got to go back to this chart, the market cap chart where this is blue. It gives you a market cap number, but to project out in the future, you got to divide by the projected supply. So it's actually one more calculation to get to this price figure. All right. So to be clear, this red dotted line is a power set of data in conjunction with an exponential set of data, which is stock to flow, divided by a logarithmic set of data, because that's what Bitcoin's all-time supply curve represents statistically. It's a logarithmic growth in time. So power and exponential divided by logarithmic. That is the stock to flow model. That is the stock to flow model. It's power data, exponential data, divided by logarithmic. Okay. Now, let's add in the other models, the prior models. Okay. We got, he's done many models, I know, but we got here the 2019 model, all right, which is all of these numbers. And again, I'm not calculating this myself. I'm just using his, he shows you the function. It's right here. The power is 3.3, all right, 3.3. He's got his 2020 model, which again has a different silver stock to flow, a different gold stock to flow. And he's got just random clusters of stock to flows for Bitcoin. So he's got 6 points, all right? And that will give you a power of 4. So 1 is 3, 1 is 4. So keep in mind, the 2020 model is going to be steeper than the 2019 model. Let's look at those now, okay? And again, those are going to be market caps. You got to divide by this logarithmic feature of Bitcoin supply to get anything that makes sense in a price expectation. I'm going to do it now. Let's do 2020 first. 2020 first. No, let's do 2019 first. I'm trying to think of for suspense. Here's 2019. This is his original model. This is what he still quotes a lot. Okay? It's the 2019 pricing model of PlanB. Okay? Pretty close. Even pretty close to my stair step that I've done. Remember, my all-time Bitcoin stock to flow, only using Bitcoin data, is the red line. But his, which takes into account, gold and silver, and gives you this power law relationship that has a power of 3. His will give you this blue line. So it starts to separate from mine. It starts to get more aggressive. All right. It's not bad, actually. And this one has been the one that I understand he's still sort of following with, because it actually is relatively decent in predicting the price. Okay. Over, at least at the tops. Okay. So it's not bad. Now let's look at the 2020 model. What he found for 2020. That's the dotted blue line. Is it too messy? Let me take off everything else but the 2 models. His 2019 is the solid blue. 2020 is the dotted blue. Very aggressive. Very aggressive. So when he was touting, for a lot of people, $300,000 Bitcoin in 2020, and I believe those calls were made, that was based on the 2020 model. It's just different data. Now, why is it different data? You might ask, again, to be completely clear, why is it different? Why do the curves look differently? Because he's using random values of gold and silver stock to flows. And as I've been repeatedly trying to say, a gold and silver stock to flow will move this way on a log-log chart, up and down. Even if the value increases of gold and silver, the market cap of gold and silver increases. Stock to flow stays relatively the same. And again, I would challenge anybody in building a stock to flow model why they use 60 for gold, why they use 20 for silver. Because you can count, I got a lot of different stock to flows here that I'm showing right here. And Bitcoin does not move up and down. Bitcoin moves up and to the right, because Bitcoin is a power relationship generally. Okay, so his model takes into account gold and silver at a random point in time and at random values that happen to be aggressive, to where he got aggressive coefficients. And this was his 2020 model. It is what it is. Overshot the bill. But the 2019 model, you may recall, or people that follow him more than I do, I understand he's sort of sticking with that for now. But the question is, if the 2020 model didn't predict right, is the 2019 model going to predict right over time? And again, not just because of that simple statement, prima facie, but it's because both of these models are using exponential assets like gold and silver and their stock to flow growth to model out Bitcoin's growth, but they are not identical. The supply of gold and silver grows exponentially. The market cap of gold and silver grows exponentially, but the market cap naturally of Bitcoin grows in power. Here's the market cap of Bitcoin against the stock to flow. You can do it against days, as I do it, and Giovanni and PlanC and Cena and all these guys, Sminston, my buddies from the Best Bitcoin Data Group. That's going to move up and to the right. But gold and silver, modeled out as a stock to flow idea, move up and down, and generally only up. So how are you going to model a curve that has both of these assets? That's what the stock to flow model is. That's what it did. And that's why you get aggressive items. Now, let's put back on exponential. This is Bitcoin. Bitcoin's price purely as exponential function. It actually looks close to his 2020 model, which I find interesting. I don't know if he was playing around with the numbers or if he knew that when he was drawing it. Again, it's a power curve. Both of these blue lines, the dotted and solid, are power. But the dotted starts way low, and again, not even close to being meaningful. If you model it out, number 4 tells you nothing back in the day, right? Whereas look at if I modeled out Bitcoin power. Ready? Here comes power. Much better. Beautiful. Right through the price action. All of these are power curves, save this exponential, which I just took off. Power curves. It's just the blue PlanB models are influenced more by exponential emission or exponential S2F, stock to flow. But interestingly, his, starting out very low, his 2020 curve kind of sticks very close to a exponential growth. So we get back to the same idea of what is PlanB saying when he keeps talking about exponential growth will continue? Is he talking about like parabolic growth or growing faster than other markets, like multiples growth? Is he talking about that, or is he talking about the trend? I've said it 1,000 times. I'll say it again. The trend of Bitcoin's price is power. The trend of gold, the trend of silver is exponential. Same for the market cap. The supply and the emission are a little bit weird for Bitcoin. Everybody should know they're a little bit weird. But what dominates, when you put a dollar sign on it, what dominates is power for Bitcoin. And so thus we can conclude that the adoption of Bitcoin, the growth of Bitcoin, is something that rotates around network growth, which is typically power. All right, let's put up 2 more just for fun. So this one is the one that I already did. Let's reset the zoom. This is just only BTC stock to flows, okay? Only Bitcoin, not gold and silver is not in this model. Looks pretty good. Again, 96% R squared, by the way. Still, but it will diverge. It will diverge here. So we'll see. Again, I would love to see Bitcoin's price stay on this. But I have my doubts. And now for the final coup de grace, let's put on this one. This is my model, my stock to flow, with putting a lot of gold in. Let's just think about all the different ways that gold and silver could grow. We can grow as far as all-time cumulative ounces, available ounces, which is this picture, just available. That's market cap. I'm not including that in the model, although you could do a stock to flow on dollar terms too, just ounces. Okay, so here's the stock to flow. 56 here in this example. Some are 56, some are 62. There's even one that's 4 for silver. Only look at bullion. By the way, if you want to, I'll say it again. If anyone tells you, if a gold bug tells you that the stock to flow of silver is only 4, they better in the same sentence say that the gold stock to flow is 20. Because a 4 stock to flow of silver, which is only looking at bullion growth, is analogous to a 20 gold and silver bullion growth, coins and bars. All right, so we're hardcore on the numbers today, guys. A lot of stock to flows. This is the scatter plot here that I did. For that, you can measure them all, including the annual. I didn't run all of it here, but just it doesn't matter. The annual stock to flows for Bitcoin, which moves in this up and to the right direction, all right, which is clearly power. But if you add in the gold and silver, which again has this weird feature of having a similar stock to flows, even though their values are going to increase over time. And I did different values. I was doing like average, average stock to flow since 1970, average stock to flow since 2009 to match Bitcoin, all sorts of gold and silver stock to flows. If you put that on, you get this nice little figure here. This is kind of funny. This is purely by chance. It has nothing to do with anything. Look, I got 16 AU, 16 gold, 16 AG, 16 silver stock to flows. Okay, so PlanB had 2 in these models. 2. 1 stock to flow for silver, 1 stock to flow for gold, and a few for Bitcoin. But 2 for gold and silver. I got 16 gold stock to flows, 16 silver stock to flows, and 18 Bitcoin stock to flows in this one. And I come up with this, with this curve. This is where I see that stock to flow is just a cherry picking analysis. All right. It's clearly something that has exponential like tendencies, because you can see how it completely misses the data here. See, my number five we're looking at. See how I'm way above the data in the past? That looks more like, take everything else off, looks more like here, the actual pure exponential function, which would draw a straight line on log scale. That's what my little creative stock to flow chart did. It gives us something that's kind of exponential, but flatter. And it happens to be about as flat as what the power projects. So, which is correct? I don't know. It was way wrong in the past, but now we're getting to a point where it's kind of overlapping. And actually kind of continues on the power growth. But it is a power function, to be clear. It's a power function running on the stock to flow value of Bitcoin. The x-axis is going to be, is this. So the stock to flow is just increasing, all right? We're in the world of 120 stock to flow right now. Going to double to 250 at the next halving. It is a power function, but it's with very thorough gold, silver, and Bitcoin stock to flows. To be clear, I think this is bunk. I think it's spurious. It's just, it doesn't make any sense. Why? Again, it doesn't make any sense as PlanB's models of doing this. Why? Again, because of this. Gold and silver stock to flow are constant. They are exponential growth. You're going to have the same stock to flow with a rising gold and silver market cap over time, whereas the Bitcoin values go this way over time. So you can't blend them together. It is funny that going out in the future, you actually have something that looks pretty close to the stock to flow. Sorry, to my power curve. But obviously it made no sense in the past, so it wasn't helpful in the past. Way over price value. And yeah, it's almost like an exponential function, but a flatter and kind of matches the power going out. So again, we can make all sorts of models, all sorts of stock to flows. There's a lot of noise here. Every function on this chart is power. It's a question on your coefficients, okay? And a question on your X and Y values. In my opinion, and clearly we know that the 2020 was a cherry-picked number that was wrong, okay? We're way off that, way off that. We should be at $6 million Bitcoin by May, according to the 2020 model. So that's out the window. 2019 model by May, 773,000 might actually happen. We'll see. My model of 16 gold and silver stock to flows, 18 Bitcoin annual stock to flows in the life of Bitcoin, 127,000 by May. A more pure, simple, just Bitcoin stock to flows is 350,000 by May. That looks pretty off. Although I shouldn't say that. It could happen. Could happen. No one knows. And then we have just the power trend itself. The power trend itself by May, $100,000 Bitcoin. Let's put on the exponential, by the way. So these are all power. I got one exponential function by May for Bitcoin, 483,000. All are very close. All are actually very close, except for PlanB's 2020 model. It's way out of the ballpark, 6 million. But if we take off the 2020 model, yeah, it's all game. I mean, in the short term, looks okay. But the question is going to be, is the 2019 model eventually going to start to look like the 2020? And is my gold and silver model like just randomly going to work? It's spurious. You cannot mix exponentially growing assets with power growing assets in terms of market cap. Excuse me. You cannot mix those two things and expect to get a coherent model. So it all comes back to this table. The purest way to look at markets is through price. Then we can look at market cap. Gold, silver in all cases is exponential. Bitcoin in all cases is power as far as price and market cap. Then if you want to back into some other things like how does emission work? How does the supply look? Bitcoin is weirder still. Gold and silver, very simple. Stay at exponential growth all the time. Straight line on log scale. Bitcoin's emission, very interesting, right? We get this nice, beautiful, smooth, asymptotic, logarithmic curve for the Bitcoin supply by doing an exponential decay function, right? Where we started out getting, 200,000, 240,000 Bitcoins per month, going down to where we are right now, 13,000 Bitcoins per month. We will have it another 4 years from now. It's a 16% declining growth rate or a halving every 4 years. Notice how the doubling rate is much more clear. But if I just sort of take it in economics Professor Ape sort of calculation, 1 divided by the trend growth rate, you got a lifetime stock to flow of 6. It's kind of weird. Doesn't make any sense. But nonetheless, just that has nothing to do with the charts I just showed you. It's a simple. It shows you that exponential functions are very clear if you can do the math correctly. So the Bitcoin emission there is what influences our stock to flow model the most. And it kind of, it's a blend. It's a blend of both power and this exponential emission. That's what gives us this stair-step feature of the stock to flow model. And it gives us, indeed some interesting things to look at, but they're, depending on what stock to flows you want to put in your scatter plot, you can get a wide array of price predictions. All right. Reading some comments. John, the model does not consider lost BTC. We're not doing that. Certainly that would be another model, and you could do that, but we're just growing it out at known Bitcoin emission. That's how the stock to flow model works. So it does not consider lost coins. If you're talking about also John, if you're talking about the available gold versus available all-time gold, the numbers are out there. They're very difficult to find. I got a source this here. I got Nick Laird, who's an Australian, nice Australian fella. I've talked to him a little bit. We've shared some ideas about the numbers. He's gone through a lot of historical documents to find historical mining production numbers. They exist even from like 200 years ago. Isaac Newton put some numbers out there. The World Gold Council is also very good at assuming these things, but yeah, it's out there. Silver Institute for silver. I got the Federal Reserve, some other data, and myself as well. Yeah, available ounces for gold will give you about a 1.8% growth rate. And if I added Let's find silver. Let's find all time. If I added on industrial in ounce terms, industrial plus available would give you all time. It's actually a slightly shallower growth rate of 1.7% per year compounded. Okay. The actual swings around. It can be above, below. The lifetime trend for all-time ounces, which is getting close to 7 billion. It is 7 billion, basically. 1.7% per year compounded. So that's all-time available. And again, I did that for this scatter plot. All right. This is to beat the dead horse of a stock-to-flow model. I got available gold, all-time gold, available silver, all-time silver. I got bullion gold, bullion silver, all right, which has a very low stock to flow, by the way. It's somewhere here. Actually, no. It's here. This is silver. This is silver bullion. 4x stock to flow. Just silver bullion, the growth of silver bullion. But if you included the full flow, the full production of silver a year, all right, then you would get something like a 4x stock to flow, a $71 billion market cap. There you have it there. So there's a lot of ways to look at it. And that's, again, my point about stock to flow not being a reliable metric, because we can put so many different things on there. You can take the full new flow of production, all right, which they like to do, these economists. As I mentioned, Safedin a couple times, he likes to denigrate silver this way, which is fine. I own no silver. I got no soft spot for the silver market. But if you're going to say that the stock to flow of silver is so low at 4, which is a true number, by the way, not 3. PlanB originally posted 3. They like to talk about 3. It's about 4 by my calculation. Then you got to, in the same sentence, talk about the gold bullion stock to flow ratio of taking the full flow of new gold ounces mined, which is like 100 million ounces a year, divided by the stock of bullion, which is way less than that. Sorry, way less than the 6 billion ounces of total available gold ounces, and you get a stock to flow of something like 20. So you plot them all out. Plot them all out, put them on a scatter plot, see what you get. That's where you get this number here that I got, which actually is funny. It's pretty close to the power curve. But I put no stock in this number, so to speak, myself, because look how terrible it looked here. And, going forward, yeah, it kind of does hug the Bitcoin, because I just happen to be using these 18 Bitcoin stock to flows of each year. All right, so this is a blend. It's a blend of exponential functions, which move up and down gold and silver, and a power function, which is Bitcoin, which moves up and to the right. Only Bitcoin is included in this stock to flow versus market cap. So these are early years. These are later years. This was last year, 90x stock to flow, $1.8 trillion Bitcoin. You can see how it works, the model. But you can't blend them. One is clearly power. Other is clearly exponential. So when PlanB was doing this with his cross-asset model here, taking 4 clusters of Bitcoin stock to flows, which is power, and just 2 points of gold and silver, which is exponential, you'll get a flawed model. All comes back to this table. Gold and silver, it's always going to keep it simple in your head. That's exponential growth. Whether you're talking about price, whether you're talking about market cap, whether you're talking about emission, supply. Bitcoin is a variety of things, but the dominant trend is going to be the highest market signal. That is price. That is price. So that's why I always fall back to this one. You got to love this. It's the same thing that I posted about in 2018. Trololo, by the way, this famous chart on Bitcoin Talk, which he was doing in like 2014. Trololo, this user, he was using a logarithmic trend line, by the way. That's what was fitting better for Bitcoin's price at the time. I should probably show a comparison of that. That would be interesting, right? So he was he was measuring Bitcoin's price in logarithmic. So back in like 2013, 2014, it seemed that was what was going on for Bitcoin. But over time, and like I said, really since 2016, I've talked about this a lot, the power curve has just, it's become, I don't know what word I should use. It's been a very strong signal. It's been almost unchanged. Meaning, if I ran a power curve here in 2016, it would look exactly almost the same as this same power curve running it in 2025. All right. It's a beautiful projection. Whereas our stock to flow numbers, not bad all time, but they will actually push out here. I can't fully discount it, right? I mean, this, what you see, this blue line, this is the best way to do a stock to flow. I don't know if PlanB has done this. This is my way of doing stock to flow. So throw out gold, throw out silver. Those are exponential functions. They can't be included. So let's look at Bitcoin's market cap in power and the stock to flow in power. But again, stock to flow is a more exponentially influenced metric, all right, because it is it's an exponential function. But you can nonetheless still run a power curve over the numbers, and you get something that's pretty close, actually, pretty close to the power curve itself. It is a power curve. Make no mistake. Both of these curves are power. They're not exponential. I did not draw. This is market cap again, by the way. Exponential is very clear. Straight line on log scale. So make no mistake. The stock to flow model is a power curve. But that's, again, why I go back to being specific about this stuff. Like, if you're going to say exponential growth will continue, that's not what this is. Be consistent about your model. Like, if you even call it you correctly label a power regression. It's a straight line on log scale. But you can't be speaking about exponential growth then for the model. Both of these are power. These are both power curves. Certainly not an exponential curve. So this is maybe I should better name this, but this is the all-time, this is the stock to flow power trend, basically. Only Bitcoin data, no gold and silver data. It's not bad. I mean, it certainly fits the price, perhaps even better than, notice it's the same R squared, 96%. But the confusion, I would contend, the confusion lies in you're complicating the model by adding more variables. All right, the green line, all right, we're looking at market caps here. The green line, very simply, running a power curve, one independent, one dependent variable on Bitcoin's market cap. The blue line is taking market cap, which is a power function, stock to flow, which is an exponential function, but shoehorning it into a power curve, which is fine. You can do it. You can shoehorn anything into something else. You can run a logarithmic trend on linear data. It won't make any sense, but you can do it. So it's taking, an exponential influenced function, a power influenced function, and running it power. That's what it's doing. And then, by the way, to get to the price models, which were this other one, right? Here. This is the same model, this one. To get to the price model, you got to divide it by the all-time supply. And that happens to be a logarithmic function in Bitcoin. So Bitcoin's just a bit more complicated when you do a stock to flow analysis. In my opinion, you just stick with the simplest, the highest market signal. You stick with price, run the trend line. One thing PlanB is right about is we will see. We will see how, even though he says, 2022 was an outlier and exponential growth will continue, which again, is just a false statement on its face. This is clearly a power curve. It's a power curve influenced by exponential emission, influenced by stock to flow. Nonetheless, if he should probably be more clear about if he's talking about exponential, because that's straight up exponential is here, or if he's talking about his power stock to flow model, which is influenced by exponential emission. So that's where the confusion comes from. Hopefully I beat the dead horse enough to show that, you know, we can model anything. I like to stick to this simpler sort of Occam's razor analyses, and that would be power. But it is true. I mean, if Bitcoin continues on this stock to flow power curve, which again is not what he modeled originally. He modeled a sort of weirder with gold and silver influencing it, you know. But if you only look at Bitcoin stock to flow, it will get a bit crazy by, say, I don't know, 2030, 2040. Because we have such crazy high stock to flows, 4,000, 8,000, 16,000 by 2050. That's what pulls this up. It gets it closer to exponential than power. That's why you have the divergence. So, though I'd love to see it. I'd love to see it. To me, it seems a bit ham-fisted to do the complicated leaps and bounds of just running the regression on power. All right. I guess that's all I had. Don't mix your models. If you're going to have exponential functions, keep them out of power models. And I will keep trying to flesh this out. Stock to flow model is not an exponential curve. It's a power curve. It's running market cap, which is power, against stock to flow, which is exponential. All right, but when you put them together and you run the function, it is still power. Power dominates the function. So that's how you should talk about it. Both this and this are power functions. They're power curves. They are not exponential. John, the BTC rewards getting to zero will be 2140, not 2040, 2140. So way outside this chart, actually. Here. You see I'm not even rounding. So here's the emission. Exponential decay, which is the emission, exponential curve for sure, a Bitcoin emission. It gets to, you know, it rounds to zero by 2080. By 2080, we're rounding to just 1 Bitcoin a month. Just wild. It's wild to think about. That's the reward. That's the block reward. 1 Bitcoin a month. And it rounds to the decimals all the way until 2140. And we will never actually get to 21 million for a few different reasons. But yeah, at the end of the day, that gives Bitcoin this nice logarithmic form of the curve. All right, guys. Gold and silver exponential. Bitcoin is power, first and foremost. Keep that in mind. Thank you for watching, and I will see you in the next one.